Hey guys, I have been talking about getting in on the recovery wave of the travel industry recently. Today I want to share with you this high quality company in the sector, Sabre Corporation. It is primarily a software and technology company providing solutions to the global travel industry. You have probably used its technology one way or another previously, just that you didn't realize. Guess you heard of online travel booking platforms like Expedia and Booking.com, or perhaps their related subsidiaries and brands like Hotels.com, Kayak and CheapFlights. And where do they get all the real-time information about the availability and pricing of hotels, flights, or even car rentals, and across so many different hoteliers, airlines, and car rental agencies? Yes, all this data are accessed from the Global Distribution System, GDS, provided by Sabre Corporation. This GDS system is the travel industry's standard, bringing the world's leading travel suppliers to a central platform. And these travel suppliers include airlines, hotels, car rental agencies, rail carriers, cruise lines, or even tour operators. Apart from online travel agencies like Expedia, Booking.com, accessing such a comprehensive inventory of travel products and services from a central database, a large network of travel buyers use this GDS system as well. They include offline travel agencies, travel management companies, and corporate travel departments. In fact, the GDS market is an oligopoly industry. The three biggest players are Amadeus, Sabre, and Travelport. Together, they make up more than 90% of the market share. As you can observe from the table here, these companies connect with a huge number of travel suppliers in their GDS system. These huge networks of travel suppliers, together with the strong relationships with travel buyers like the travel management companies and online travel agencies, result in a strong network effect within the ecosystem. This serves as a high barrier to entry, as it is difficult for new entrants to try to get multiple airlines, hotels, and other travel service operators to provide such large-scale inventories to a new platform without sufficient travel buyers on board. On the other hand, without this travel content provided from these travel suppliers, it will be difficult to convince any travel buyers to use the new platform. Hence, existing incumbents like Sabre can enjoy the strong business moat with its oligopoly status. Having such competitive advantage is perhaps the main reason for picking Sabre as a bet for the recovery of the travel industry. That aside, the company has evolved to provide more than just its GDS platform. Sabre Corporation now reports its business under two operating segments, Travel Solutions and Hospitality Solutions. Travel Solutions will consist mainly of the GDS solutions the company provides for the network of travel suppliers and buyers, including a broad set of solutions integrated to their GDS, such as the central reservation system used by hotel chains. There are many technology products and solutions offered through software as a service and hosted delivery models. And they range from customer-facing technology to back-end reservation systems and operational platforms to help travel suppliers like airlines to drive operational effectiveness. As for its hospitality solutions segment, the company also provides technology and software through SaaS and hosted delivery models, but mainly to hoteliers around the world. These solutions enable hotel chains to manage pricing, reservations, and retail offerings across thousands of distribution channels while improving guest experience throughout the traveler journey. As of the end of 2020, the company serves over 42,000 properties in 180 countries. Despite its strong business moat, the company hasn't been spared from the outbreak of COVID-19 in 2020. As you can observe from the table here, revenue has been slashed by 2/3 due to the lower volume of air travels, both for leisure and business. Well, needless to say, Sabre Corporation, whose key business in GDS works on charging travel suppliers and buyers per transaction, suffered heavy losses in 2020. Hence, the drastic reduction in the booking volume on its platform has slashed the company's revenue substantially, reporting a whopping $1.3 billion net loss in 2020. The question is, how bad is it? How long can the company sustain such low travel volume? And what's the potential upside for investors if we take up a position now? To keep the business afloat, Sabre's management has taken significant steps to boost its liquidity position by raising more cash through the issuance of debt, common and preferred stocks. We will not go through the details of the debt and share issuance, but take a look at the company's long-term debt. It has increased from $3.3 billion in 2019 to about $4.7 billion in 2020. Also, based on the latest first quarter of 2021 report, there's 318 million common shares outstanding, a 16% increase from 274 million shares in the same quarter last year. Understand that Sabre Corporation was trading at around $22 a share in a time before COVID, with 274 million shares outstanding previously. This will work out to a market cap of around $6 billion. adding the company's debt of around $3.3 billion, we can derive its enterprise value to be roughly $9.3 billion in 2019. Let's say if the company's valuation reverts back to 2019's level, meaning enterprise value is the same but with a higher debt level of $4.7 billion and with a more diluted pool of shares. Deducting $4.7 billion from $9.3 billion enterprise value, market cap should work out to be about $4.6 billion. Divided by 318 million shares outstanding, we will derive a share price of $14.50. Note that I didn't consider the additional cash raised from all this debt and share issuance, as this cash will probably be used in the near term to sustain the business when the travel volume remains low compared to 2019's level. Anyway, this means that if Sabre's business resumes back to 2019's levels, with the current capital structure, a valuation similar to $22 a share back in 2019 will be equivalent to today's $14.50. This is just a very rough estimation of how the share price should compare before and after all the debt and shares issuance to help us understand where we are standing today compared to the past. As a matter of fact, the management has been cutting costs diligently over the past year, saving an estimated $200 million annually. This should add to the company's valuation eventually. Long-term wise, we see Sabre progressing nicely with its strategic initiatives. In fact, there's quite a number of them that the company is pursuing. For instance, its Smart Retail Engine is a machine learning-based AI technology that helps airlines to deliver the right offer at the right time in the right channel. This will strengthen travelers' satisfaction and generate incremental sales. Also, Sabre is continuing to execute on the migration of its platforms to Google Cloud to reduce cost and enable greater scalability moving forward. These technological transformations and innovations are great initiatives, and it gives investors the confidence that the management is improving itself continuously to ensure that it stays relevant and competitive in the market. Anyway, as discussed in previous videos, we are seeing signals of strong recovery in the travel sector. Here, we are looking at a more specific data on the GDS industry net air bookings compared to 2019's levels. We can observe that the net air bookings are recovering from the first outbreak of the coronavirus in the beginning of 2020, and there's more substantial improvement in North America. This is in line with the increasing percentage of Americans being vaccinated in the recent months. While the GDS volume is still way below the 2019's levels, we see that the hotel's CRS transactions have been improving significantly over the recent months to levels just about 20 to 30% below that of 2019. Again, while air travel is improving, it remains depressed due to international travel restrictions. However, US domestic and leisure travel are coming back fast, hence more people are starting to book hotels in the recent months, resulting in the hotel's CRS transactions leading the recovery of Sabre's business. So, as discussed earlier, with a comparable valuation of around $15 a share, and that's assuming that travel recovers completely to 2019's levels, the upside doesn't seem high enough for the substantial risk investors are taking in the short term. What we need to take note of is the substantial amount of debt Sabre has on its balance sheet now, especially those that the company issued in 2020 that carries high interest rates. All in all, interest expense alone works out to be around $250 million annually. Therefore, key risk will of course be the fact that the recovery of travel takes longer than expected. This may in turn cause the company to pile on more debt and issue more shares, thereby causing further dilution. And also that business travel may equilibrate to a lower level in a post-COVID era, with companies more attuned to using technology for communication purposes. Though I do think that in the very long run, even business travel will recover as we learn to adapt with the virus as it becomes endemic and part of our everyday lives. Valuation-wise, if travel continues to recover, Sabre Corporation should experience positive operating cash flow again soon, and eventually in the long run, as the company pays off its debt and repurchases shares like what it has done in the years before the pandemic outbreak, its valuation should revert to 2019's level, meaning the share price will 2x to the $22 and $24 range from the current level of $12 a share. While it will take some time, I think given the very strong business moat Sabre Corporation enjoys, the company will have the capacity to do just that in a post-pandemic world. Hence, my strategy is to add a small position of this great business first and perhaps add more if the share price comes down again, whether due to market fluctuations or due to new debt or share issuance if recovery takes longer than expected. In other words, make sure you have the bullets to add more positions in order to prevent the dilution effect that will affect your long-term returns. Let me know your thoughts on this and share with us in the comment below, and remember to subscribe to our channel so that you can be informed once our next investing tip is out. In the meantime, check out the recommended videos here to continue learning so that you can make better investment decisions. Keep learning and happy investing, and we will see you soon.